Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on the technology sector, which again, in my opinion, is keeping the market propped up with its strength. As the bulls bought the dip on the gap down open, we closed right on the middle Bollinger Band, literally 1 penny above it, 52.83. The exponential moving average resistance is still rejecting the price. This is 4 days in a row. Those levels are 52.86 and 52.90. So we closed just below them, but it is very clear that they are still resistance. So a very bullish day, no doubt about that. And if the bulls can get over these exponential resistances tomorrow and close above them and turn them into support, the high of the bounce attempt from last week, 53.16, is the key resistance to be watching. So tomorrow, that's the level for the bulls to break to prove that they are changing the sentiment, which shifted to bearish as soon as we dumped last week, losing the middle Bollinger Band support, a fairly weak bounce attempt with a bear flag setup, and confirmation of that bear flag with the continuation to the downside, but obviously the bulls buying that dip, and the exponential resistance still in play. So on the weekly time frame, could be a bull flag here on the weekly, as this is normal healthy consolidation at this point. We are not confirming the bearish reversal candlestick of last week. Obviously still 4 trading days left to go, so that could change, but we are holding these exponential moving averages, and you could draw a parallel channel of support and resistance after a huge flag pull of bullish action to the upside. Normal healthy consolidation currently at this point. Apple is seeing that same strength, holding the middle Bollinger Band. This is the first test since the first day of 2017 of that middle Bollinger Band. And the bulls passed that test with flying colors, holding that level. So we only have a couple resistance levels here, 141.22, 141.74, all-time high 142.80, keeping the bulls in full control as long as that middle Bollinger Band is support. We also set a new consolidation low. So I'm looking at a must-hold support of 137.05 and a new higher low of 138.62 that is key support as well. Upper Bollinger Band resistance has been rejecting the price the past couple of weeks, but the question is going to be, how long can the bulls maintain this middle Bollinger Band as support? Negating the bearish reversal candlestick from last week currently, same story, 4 trading days left to go, and a lot can change. But as of right now, holding the 4-period exponential moving average, and it would require losing all of today's upside from that gap down open in order to confirm that bearish reversal candlestick that did form last week. And last, we got Facebook, also very strong, holding the middle Bollinger Band at the low of consolidation last week, and at the gap down open today, holding it as well, 138.65. We bounced 12 cents above that level and closed strong. Same thing here, not a lot of resistance, 140.65, 141.02, 142.31. Lose that middle Bollinger Band, and that will change things in terms of sentiment in the short term. Weekly time frame, bearish reversal spinning top, almost a doji last week. Not confirming it this week. It's going to require these names to lose their daily middle Bollinger Band if the bears want any shot of confirming bearish reversal weekly candlesticks. So the bulls are still in full control of the tech sector, and the S&P 500 is not going to see significant pullback, in my opinion, unless we see some significant pullback in this tech sector. Financial and tech sectors are the strongest, I should say the biggest holdings in the S&P 500. So if the tech sector pulls back stronger, the S&P 500 will follow, and if it holds up well like it has been doing, so shall the S&P 500, in my opinion. So we'll be watching all these correlations and watching these middle Bollinger Bands going forward. We'll check back in with you tomorrow. I appreciate you watching. Have a fantastic night.